Greetings guys, welcome. It's gonna be an awesome video. So I just want to bring to you this wonderful strategy. It's an old strategy which I once used in the past, but early this year, I just thought of trying out again, because before it was working very well, but it's just that I then shifted the way I was trading, so I had to change the strategy that I was using. So you know that I'm a price action guy, but I really don't throw away things which are valuable. So I just thought, let me bring this strategy out, and it has been working so much. And actually mixing it with the information that I've been giving you, mixing it with what I have, without what I know, this strategy produced very beautiful results for me this year when it comes to synthetic indices. I just thought, let me try it out on synthetic indices. So this is, guys, this is called the Payapa strategy. So I'm just going to teach you about it both in the mobile and in the desktop version. So I'm just going to be sharing with you how to set it and how to follow the rules both in the mobile MT5 and also the desktop version. But in the when it comes to explaining the entries, I will just explain here on the big screen, but it's the same principle on the mobile app. I hope that one is clear. So I hope a lot of you guys are familiar with the settings, but let us just start in the mobile app and see what we got there. So okay, here is my screen. So firstly, I will just delete everything. I'll put everything in the bin. So you know that it's kind of a strategy based on moving averages. It is just an actual trend strategy which detects reversals, which detect major reversals. So the first thing that you need, guys, I will not tell you a lot of things. I'm trying by all means to keep this video short so that it can be watchable. So the first thing you need is the RSI, the relative strength index, and you have to make sure that the period is at 1, just like this, and also the color is white. So you can change the levels according to your desire. So let me just change them to default, like 20 and 80. So the levels is 20 and 80. So these are your overbought and oversold zones. So when you're done, we are set with the RSI, and then we are going to need our 5 moving averages. The first one is period 5, the second one period 8, the second one 13, the third one 21, and the is it the third one or the fourth one? Yeah, it's the fourth one, 21, and then the last one, it is 200. So period 5, period 8, period 13, period 21, period 200. So you just put them in this indicator window here. You click in this F here in the indicator window 1, and then you go to moving average. You put let me start with 200, and I use a certain color, and I also add again, I still click on this F here on the indicator window 1, and so on. I add a different one, and make sure, guys, that you make the colors different, but there is nothing more special about the colors. So let me just put the 21. Oh, this thing is standing on the wrong way. Oh, guys, I really don't use my phone that much when it comes to trading. Okay, the pixels are fine. Let me leave them like this, and let's go to moving average 8. Then, and let's add the last one, which is 5, moving average period 5, and change the color to something like green. And let's change also, guys, the pixel of the 200 period, so that it can be bigger than all of them, because it is the most important one when it comes to this strategy. So here you go. However, if you want, you can also add a lot of traders, they also add a MACD level here in the RSI. They also add a MACD level which will tell them either to wait or or whatsoever, either to wait or enter that particular direction or close their profit. So it's a 50 percent level, or it's a 50 level in the RSI. It's just in the middle here, but for me it has not been useful. It has not been useful because what I use for entry I will explain to you, and what I use for exit I will explain to you. So this is how you set it on the mobile version, and make sure that when you use it, guys, you always zoom out your screen like this. But let me just explain all the processes. So here we are. Now let us get into the desktop version. It's simple, guys. I will not just waste much time. You add the oscillator first. You can add any oscillator. Let me just add the stochastic and keep the levels like that. And let's see. And I just changed the colors, guys, to white so that they don't appear here because my background is white. So I kept the colors to white. You can also add the RSI as we did in the mobile, but I just add the stochastic here. And then now the tricky thing is that when you add the indicators, you don't go to insert now, but you go to this panel here, the navigator panel, and you click the drop down for indicators, trend indicators, and you go to moving average. You drag the indicator, you put it here on your screen, you set your period to that desired period. Let's start 200, and we drag again, we put it in, we set to 21, we change the color, and let's bring back the length. We add another one as well, we put it to 13, we shift the color to something like, I don't know, and another one again, let's make it 8. So guys, it's not an issue of the numbers being right. So even if you put period 9 instead of period 8, because the difference, it will be just 1K, so it won't affect anything. So maybe there are a lot of people who are interested in saying, okay, what's up with the numbers? It's an issue of understanding the trend so that we'll be able to figure out the reversal. So okay, when you have set it now, so here is the important part when it comes to the rules. What are the rules of this strategy? So first thing, as I told you, you should always make sure that your chart is zoomed out, but in the mobile version, zoom it out to the maximum. But here on the desktop, don't zoom it out to the maximum. For an example, here is the maximum. So when you have reached the maximum, zoom out, just zoom in just once, click once, and then there you go, you are good to go. So then what you need, based on my research or based on what has been working for me, we are just going to be using 2 time frames only. We are going to use the 15 and the 5 minute. However, if you are a high time frame trader, you can go to the 1 hour and the 30, but I'm just going to be using 15 minutes and the M5. So the 15 minutes is where we look all things. It is where we look all things. I really don't have something to draw in my screen. It's just that I am now used to trading view. So forgive me, guys, for not having something to draw in the screen, but I hope you can see my mouse being highlighted. So the first thing that you look at in this 15 time frame, it is looking at these indicators down here. You should make sure that they are either overbought, all of them, including the 200, or they are oversold, all of them. So for an example here, all of them, they are above 80, meaning it means that the price is has went far above in a state of overbought zone. When it comes to these indicators, these moving averages, which are small, they indicate the price, because you can see their movement, it's more like the movement of the price. And then the 200, it resembles the trend. So usually when the price touches the trend, it is likely, when the price touches the moving average, it is likely to reverse. Why? Because the moving average should tell you the direction. When price is below it, when these moving averages are below it, it means that it's a downtrend. But when they touch it, it means that something else might happen. For an example here, you can see that it sometimes acts as a support or as some kind of a resistance below here. Price touching it, going down with it. Price shifting from being below, going into being above it. So when you see your indicators meeting up here, that's your first signal that, okay, if they meet up above 80, it's a sell signal. But when and how do I sell? Here is the trick. For you to sell, you then need one thing. You need to wait for a breakout here. You need to wait for a breakout here. Let me just draw a line there. So there we go. We had some kind of an upward channel. So now that's what the M5 is for. That's what the M5 is for. Usually when your price enters this level, remember we focus on this level in the 15. So it started here, meaning somewhere around there. So if your price entered that level, that's where you analyze the pattern in. So we see that there was an ascending channel and we wait for some kind of sellers confirmation. So now that's where what I taught you should come in. That's where what I taught you should come in, making sure that you enter at the right time. So we had highs here. You can see that already these were some kind of horizontal highs already here before the price could break out even this channel. So it was already horizontal highs, meaning this was where our stop loss should be if you were entering first without waiting for confirmation, because there are different ways of entering this market, guys. Remember, we are going in for the long term. We are not just entering and we are going to be taking few dollars. No, this strategy shows you reversal. So we are going in for the long term. We are not just going in here and closing profits here. No, it doesn't work like that. We go in here, we close profits somewhere down below there. It's a long-term trading system. It's a long-term trading system. Same thing applies here. If you enter there, you shouldn't be taking your profit somewhere like there. No, you should wait until there are signs of market reversal somewhere until around there. So meaning that's where you're going to be exiting your trades when this downward channel was broken. So same thing applies here. We enter here, we put our stops above there. We are detecting for the long term. So now those who are just watching the video just now after I'm uploading it, you can see this opportunity. But what you need to know is that we have to go in your chart and wait for some kind of a high again. Let's say something like this, and maybe a formation of a high somewhere there. Then you can sell so that the price will go down. But now you should wait. Those who sold earlier, they are on profits for now, and it's a good thing. So as the price move, you change your stop loss. Remember the issue of trailing a stop loss. So those are the rules, guys, that you need to follow. When it comes to exiting, sometimes you exit because these indicators, they are now going to meet down below in the 15 time frame. So in the 15, when they go down, that's why some will also add the 50 level here. Will also add the 50 level here so that they will be able to also understand where they are going to exit their trades. So let me just see if I can edit and just show you something. Add something, and let's put it 50. Wait, not 59. Come on. So now it's 50. So usually 50, that's where you close or you wait. For an example, when your indicators approaches this level 50 here, that's where you close your profits. So adding the 50 helps that way. But me, I exit trades in a different way. I hope those who are familiar with my videos, they know how we exit trades. We exit trade through momentum. So you can exit them through the levels here. It works. So guys, this is a beautiful strategy that works, and I assure you, you're going to see wonderful results. But if you're interested more, you can just research about it. It's this Payapa strategy. You can just research about it. But me, I just explain things that you really need to know. So thank you for watching this video.